What up, guys? Welcome back to my channel. Please, if this is your first time coming across to my channel, do well to click the subscription button and turn your notification bell so you get notified anytime I drop videos like this. Okay, in today's videos, I want us to discuss why most of the traders are losing their trades and also how to avoid it. Now, the reason why some traders are losing trade is because they fail to spot out liquidities. Okay, the area that contain liquidity or some of them are rushing to enter the trade. Now, the reason why some of you are making impulsive trade or losing trades is number one, earlier entry. Earlier entry. Earlier entry is the reason why some traders are losing money in the market. How do earlier entry involve in this whole story? Now look forward to my screen. You can see this area. I have a setup where the market smashed this SL before reversing back to our favor. Now, how do this affect my trading journey? It affect my trading journey because I enter the market at the earlier stage where I'm not meant to enter. Automatically, the market kick me out before moving to my direction. So that's what we call the earlier entry. Now, this is an order block that every trader is expected to avoid. Instead, take the second order block as your point of interest. Now, in this whole scenario, I want to teach you guys how you should spot a good order block and how to avoid an invalid order block. Now, let's continue. If you have a setup like this, if you have a setup like or you have a structure like this where market take out break of structures, the only thing you should keep in check is the origin that caused the break of structure. Now, the origin that caused the break of structure is now this order block. That's the origin that caused this first break of structure. And the market rallied to the upside and created a protected high at this point. And now, at this protected high is now our target. The next thing we should need to do is to get a good entry point model. Now, the reason why I say you should avoid earlier entry is because the earlier entry is an inducement, it's a trap that the market set for the impatient traders so they can penetrate into the market and they'll be stopped out. They'll be used as an exit liquidity, which you should avoid after watching this video. Please, before we continue, I will just give you a little minute to go to my subscription button, click and turn on notification bell so you get notified anytime I drop videos like this. Without wasting much of our time, let's dive in. Now, you see how I entered this trade at this area and the market stopped me out because I entered earlier due to impatience. Now, at this point, when market create a high or a low like this, when market create a low like this and moved up, smashed the previous high, which is this high, automatically we'll have a break of structure here. This is a break of structure. What we should do then is to locate the origin that caused the break of structure as our point of interest. And this is the origin that caused the break of structure, which is our order block. Now, you guys know what we call an inducement. An inducement is a pullback that doesn't take out the previous low or high. Here we'll have this area as our inducement before the market rally to the upside. The same thing happened here. This is the origin that caused this break of structure. And this is the incomplete pullback that doesn't take out this previous low. Automatically, this area is an inducement. And some traders make a mistake entering trade at the inducement point, which the market will give to them as a good order block without knowing that it's an invalid order block. And once you take a trade in that particular order block, the market might once go to your favor with one candle. The next candle will skyrocket, stop you out, and then pick entry at the main origin that caused the break of structure, who tell us the market that which indicates the trend continuation. Now let's dive in. So without wasting much of our time, I would like to tell you how you should start taking entry and how you should start avoiding all these minor break of structures. Sorry, or all this minor inducement area that has led to other block. Now what you should do then is anytime you see a setup like this, or anytime you see a structure like this, the first thing you should do is check the two areas. Always know the origin that caused the break of structure. This is the origin that caused the break of structure. Now let's spot out other block at the origin that caused the break of structure. Now this is my other block. I will cover the whole body of the candle and I move like this. Do you see it? Now the market have used this area or used the people around here as a scapegoat. Okay, the market have hit their stop loss. Okay, those that entered here initially, those that entered because they can't be able to spot out liquidities in the market. They might enter like this, they TP like this, they sell below here. The market have stopped them out because they enter in an invalid area, which is the earlier entry. But those that extend the entry to this point and then target this high and also take your stop loss below this area, do you see how the market respected them? This is what we call the earlier entry and how to avoid it. And this is the main entry that you should enter. I taught you guys this, those of you that are in my mentorship class, I taught you guys that anytime you have an inducement like this with another break of structure here and also an order block here, you should not be in a haste to make decision at this inducement. Instead, give it out for the market to sweep it out and pick entry at the other block, which you're expecting the market to move like this. It will take this area out, pick entry at the other block and continue. This is a good entry model, and if you study this, it's gonna help you and also save you from a lot. I know many traders have lost a whole lot of money. Some have blown their account because of this particular mistake. But today, after watching this video, go and implement this. This is how to make a good and clear decision in the market. Now, the second thing that affect traders is number two. We call FOMO. FOMO, some traders call it FOMO, but the full meaning is fear of missing out. You are afraid of losing this trade because this trade gonna buy. Yes, you and I want to make the money. Why are you trying to catch up a falling knife? Market is trying to make a good decision. Stop countering the trade. Instead, wait for the market to come for you. Then you make a future decision and print from the market. It's not about making the money, it's all about protecting your capital. No, the money must be made. That's true. But you blowing your account, it have denied a lot of opportunity in the market from you. So stick to your words and stop applying it like FOMO, fear of missing out. You don't want to lose a trade, you don't want to then you make unnecessary decision. It's gonna hurt you. Okay, do you see how I could be able to spot out this good entry? And this is how our stop loss is at the safer side and the market is going in our direction. What do you think? Is this strategy okay? Now, before you do this, always have this drawing on your white paper where you have the market give you something of this nature. Now, if you want to buy, for the first time, avoid this man. This man is a trap. This man is a trap. Okay? Some traders or some impatient traders will be waiting for the market here. There's a high probability that the market will come, react small, move up and drop again. Pick entry at the main order block and ascend. So this is a good entering point. I don't know if you get this, if you find this video helpful. Please do well to subscribe. I'll be doing more videos like this to educate the newbies. And believe me, you're gonna learn a lot from this page.